Welcome to Investing Confidential. Pivot or no pivot? That is the question. Powell at the Brookings Institute. I mean, this guy just amazes me how much of a fool he makes of himself every time he speaks. He showed his true colors. Okay, I think he misspoke at this Brookings Institute. He proved that he's a puppet to the puppeteers of the private equity funds like Carlyle and Blackstone. They pull his strings. They're buddies. He's their buddy. He doesn't want to be killing the economy, but he has to, and he has no choice to do what he's doing. And he shouldn't have indicated what he did, but he kind of spoke the truth, and I'll tell you in a second why he did that. But all the other Fed governors have stood their ground. Okay, they've been hawkish. They've been talking about that rates have to go higher. They have to go substantially higher, which is the truth. Rates do have to go higher. This economy is on the verge of going into a deep downturn, but that's the only way to get inflation down. If this guy Powell, okay, had his wishes and the Fed were to pivot because his private equity buddies want that to happen because they're having some major problems themselves, then inflation, folks, would just skyrocket again. Okay, we would go back to 8%, maybe to 9%, and it wouldn't be good. You've got a situation where you've got a Fed governor who is not really a hawk, but has lost credibility. Now he's gaining a little bit of credibility back with this hawkishness. And all of a sudden now he's going to lose credibility? No, I don't think so. So when we talk about the next Fed meeting, 50 basis points, that was baked in. That's been consensus for a time. So I don't know why this is surprising. Why does the market rally on consensus? Because the market is desperate to have a pivot. Okay, very desperate. Also, the market's very short. I showed put-call ratio. You can look at put-call ratios till the cows come home. There's tons of puts out there. Tons of people have protection on. So it doesn't take much for people to run for cover. Nobody has the patience. Everyone runs. So when Powell says something, which is consensus, that he's going to have lower increases going forward, boom, the shorts cover, and you sell your puts or whatever, and then you have these monster bear market rallies. And by the way, this was a bear market rally. Okay, so we've talked about bear market rallies. They're explosive to the upside. As you can see here, we've seen them before. We're going to see them again. And they're to be sold, not to be bought into on a momentum basis. So I believe we're still in a bear market. This was a bear market rally, and that's the bottom line. Now, the inflation, okay, this is why you can't get too excited about even a pivot. Inflation is very sticky. I'm in the New York metropolitan area. As you can see here this morning, we had the MTA, which is the Metropolitan Transportation Authority, which controls the subways and the buses. Nobody's going on the subways and the buses. There's too much crime. Okay, there's tons of quality of life crime. People, the politicians focus on murders and all that, which is terrible. But the reason that people don't want to go into New York City, don't want to go on a bus, don't want to go on a subway, is because there's too much crime, and therefore they're not. And therefore the MTA is bankrupt, and therefore they have to do fare increases. The toll, people aren't commuting anymore, so the bridges are, they're not generating enough income. They're all going up 5, 6, 7%, and that's inflationary. This is happening all over the U.S., not just in New York City. So all of these transportation organizations, and they're all quasi-government organizations, they're going to have to raise fares because they're having major problems because of what the pandemic caused in terms of the different ways people are working. So, that's, again, all inflationary. So as inflation comes down, it's not going to go to 2% target of Powell. No chance of that. It's going to remain 4 or 5%, which is not good. It's not good for the economy if it holds that level for a long period of time. And this is why we're saying we're in a bear market, and you have to be careful, and you've got to sell the rallies because this inflation is not going away, and you're not going to get rate cuts. I think everyone's looking for rate cuts. It's not going to get rate cuts. If they were to pivot and cut rates, which I think what Powell wants to do deep down inside, or at least his puppeteers wanted to do that, inflation would spark up again very quickly. And the Fed knows this. And this is not what they want. So either way, no matter what they do, pivot, no pivot, there's a recession coming, folks. It's not going to prevent this downturn, this major downturn in the economy. Recession is coming, and there's no way to stop it at this point. That's also baked in, like 50 basis points in the December meeting. You got a recession that's already baked in. Looking at the yield curve, et cetera, there's no way to stop it. And then again, there's more evidence. Consumer confidence. You got the conference board was out with numbers. I mean, this conference board, I looked into it today as I looked into all these numbers. This is a joke. I mean, take a look at who these members are that determine all these numbers. Okay, take a look, scroll through. This is from the website, folks. I mean, there's a lot of large companies, consumer companies, that benefit from the numbers not showing what the real numbers are, right? So they could do that by, being involved in these discussions. And who does these numbers? Here, Taluna Influencers. I don't know what Taluna Influencers is, but they determine the data. So what Taluna Influencers do is they go out and they do online questionnaires. Now, do we know the age group of these people? They don't say anything. They don't disclose that. And could it be younger people who tend to be a little bit more optimistic than the boomers when it comes to the economy? I don't know. I don't know who these Taluna influencers are, but I would rather, look at University of Michigan, which has been around a long period of time. I know none of these numbers are that accurate, but University of Michigan has been a while, and it's actually been pretty accurate in terms of as a forward-looking number to determine what's happening with the economy. But look at the difference between the University of Michigan Consumer Confidence and Consumer Board. Look, consumer confidence, you can manipulate it for a while, but it's going down to where University of Michigan is. And the bottom line is, again, this is a consumer-led economy, and we are in deep doo-doo, folks. The consumer is retrenched, dramatically retrenched. Now, look, I don't like the banks and the brokers in terms of how they do things, but Morgan Stanley here, their strategists are coming around. We're going to have a tough time. Okay, so whether it's Morgan Stanley or any other banks, most of these economists are leaning towards a hard, or at least have a higher percentage of a hard landing than a soft landing. And a hard landing essentially is a recession. When you hear a hard landing, think about recession. And here's some more evidence that a lot of these numbers don't make sense. You have, job openings are turning down. Like, this is something that is just going to keep accelerating. We've seen the beginning of this, and this is not good for the economy. The tech worker demand is falling off a cliff, and you can see that in the numbers already. And these are all leading indicators, folks. These are all leading indicators, and it's telling us that something's not good. Okay, so margins are hurting, top line is hurting because of the global situation. Global demand for consumer is dropping off a cliff, or has dropped off a cliff. And I want to mention finally one thing about these job openings and numbers overall. I mean, even the job openings are kind of a joke. I mean, you've got hospitality industry, franchise industry. They employ a lot of people, but with all this inflation, you look at what they pay, their minimum wage. I mean, it's pathetic. I mean, these are not, you cannot live working. You can't work for a Hilton hotel, and make $20,000 a year and live. That's what Hilton Hotel wants to pay you. That's why there's hundreds of thousands of jobs in the hospitality unfulfilled, because they don't pay, and they're going to have to pay, and they will pay. That's inflationary. But you can't expect anybody to work for that kind of money with low benefits and for these low minimum wages. It's just not going to happen. And again, this is all going to add to inflation. So bear market rally, if you're a trader, wonderful. Take advantage of it. May not last more than a couple of days, but take advantage of it. But if you're an investor, you have to be wary, and also be careful out there.